What if I told you that the very thing designed to save our entire financial system is actually what's poisoning it from the inside out? Today, we're going to dive deep into the hidden dangers of creating money out of thin air. And believe it or not, it's a story that connects 14th century China to the global economy that we're all living in right now. It all kicks off in one very strange year for modern finance.
So, let's set the stage. The year is 2022. And in that single year, we saw two gigantic but completely different financial crises play out right in front of us. You had the old guard, traditional banking, on one side, and the new kid on the block, crypto, on the other.
And wow, the difference is it's night and day. In the traditional system, when huge Swiss banks started to teeter on the edge of failure, what happened? Well, the central bank swooped in. They fired up the money printers, handed out loans. They basically hit a giant reset button. And the customers? They were kept safe. But then you look at the crypto world. When giants like Luna and FTX just completely imploded, there was no bailout, no safety net, nothing. Just millions of regular people losing everything.
So, when you see that, your first thought is pretty obvious, right? The system that saves people, the one that prevents a total collapse, that's got to be the better one. Of course it is. But what if that safety net, that constant rescuing, is actually creating a much deeper, much more dangerous problem? A problem that we can't easily see.
And that question, it leads us right to the core sickness of our modern financial system. See, these bailouts, they might look like a miracle cure in the moment, but over the long run, they act more like an economic disease.
Think about it. When you constantly save companies from the consequences of their own bad decisions, the very ideas of risk and failure get totally warped. The market literally loses its ability to tell the difference between a healthy, thriving company and a failing one, because the failing ones, they never actually fail. They just get another injection of cheap money to keep going.
And this leads to this really creepy phenomenon called the zombie company. Now, this isn't just a company having a bad year. No. This is a company that is fundamentally broken. It doesn't even make enough money to pay the interest on its loans. It is, for all intents and purposes, economically dead. But it's kept walking among us by endless injections of new, cheap debt from the central bank.
So how big of a problem is this? Well, it's absolutely staggering. Back in the 1990s, the number of these zombie companies in the US was basically zero. Today, the analysis that this whole explainer is based on suggests that 1 out of every 5 US companies fits that zombie description. They're just clogging up the arteries of the economy, sucking up money that should be going to new, innovative ideas.
And listen, we are not talking about some obscure corner-of-the-market businesses here. The source material for this points to some of the biggest, most famous brands in the world as having shown these zombie-like signs at different times. This is not a fringe issue. It is a systemic rot that has worked its way to the very top. But here's the really scary part. This isn't some new 21st century problem. History is absolutely littered with examples of what happens when governments or banks decide they can solve all their problems by just making more money. Let's take a look at a few. We're going to take a quick trip back in time to 3 very different moments: 14th century China, 17th century Sweden, and 18th century France. Each one of them tried this grand experiment with unlimited money, and each one of them offers a critical warning for us today.
Okay, first stop, China's Yuan dynasty. Way back in the early 1300s, Kublai Khan basically outlawed real assets like gold and silver. He forced everybody to use government-printed paper money instead. And at first, it seemed like a genius move. The economy exploded. But only took 4 years for that boom to turn into an 80% inflation rate, which then just spiraled out of control into a hyperinflationary collapse that absolutely wrecked the empire.
Now let's fast forward about 3 centuries, all the way to Sweden. A man named Johann Palmstruck would walk right into that exact same trap. It just goes to show you the temptation to create money from nothing is powerful.
So Palmstruck, he starts Sweden's first central bank to try and kickstart a sluggish economy. He starts issuing these paper notes as loans, way more than the gold he actually had in his vaults. And guess what? Again, the initial result was a massive success. The economy took off, the king loved him, he got awards. But pretty soon, he was just printing more money to cover up bad loans, people lost faith, and a huge bank run in 1668 just destroyed everything. His bank, his fortune, even his freedom.
But maybe the most legendary example of all came just a few decades later in France. The entire kingdom was flat broke. And in a moment of pure desperation, they handed control of the whole economy to a professional Scottish gambler named John Law. Yeah, you heard that right, a gambler. And his plan?
was the most ambitious one yet.
Law sets up a central bank and just starts printing mountains of paper money. And he funnels all of it into the stock of one single company, the Mississippi Company. This created one of the biggest speculative manias in all of human history. Everybody got rich, for a little while. But when that bubble inevitably popped in 1720, it didn't just crash the company. It took the entire French economy down with it. John Law had to literally flee for his life from the country he almost destroyed.
Okay, so China, Sweden, France, 3 totally different centuries, 3 different cultures, but it's the exact same story. And when you look closely, you realize they all follow the same predictable 4-step cycle of collapse. It's like a blueprint for a disaster.
And the pattern always builds like this. Step 1, it all starts with printing money to fix some problem. That leads directly to step 2. Bubbles start forming everywhere because risk just doesn't seem to matter anymore. Then comes step 3, when the first cracks appear. Those zombies we talked about start to fail. But what's the response? Just print even more money to cover it up. And all of this leads to the final, catastrophic step 4, a complete and total collapse of faith in the money itself, which leads to hyperinflation and economic ruin.
Which of course brings us to right now. We've seen the historical blueprint, so we have to ask the hard question. Where are we in that cycle today? This is what leads to the core argument of our source material, that we are living through history's biggest bubble, and this time it is dangerously different.
Just try to wrap your head around the sheer scale of this. In the 14 years since the 2008 financial crisis, the United States has printed nearly 8 times more money than it did in the entire first 200 years of its existence. The scale is it's completely unprecedented in history.
And hold on, because this is not just an American experiment. Not even close. It has been a coordinated global effort. If you look at central banks in places like Japan and Switzerland, they've actually been even more aggressive with their money printing than the US when you compare it to the size of their economies. And that right there, that is the terrifying difference. All those historical collapses we looked at, in China, in Sweden, in France, they were all local. When their systems finally broke, the rest of the world just kind of moved on. But for the first time in human history, every major central bank on the planet is running the exact same playbook at the exact same time. There is no outside stable system to escape to.
So, this entire analysis boils down to one final, absolutely critical question. When a system that's based on creating unlimited money finally reaches its logical conclusion, but this time on a global scale, what happens then? What does a true safe haven even look like in that world? Is it a limited physical asset like gold or silver? Or is it something new like Bitcoin? That right there is the multi-trillion-dollar question for our century.